What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over a bit of a recap, but more importantly, a real good lesson on how to manage risk. Check it out. All right, guys, so we're going to go ahead and jump right on into this. Oftentimes we get overzealous as traders and we take on more size than we should. We push when things are slower, any number of things that cause us to over leverage our accounts. Not in that we go and trade into margin and blow up our cash plus margin and then owe the broker money. Not that type of over leveraging, but we over leverage our, let's say, our edge. Okay, our edge is not there at the given time because the market is slower and we take on more size because we're on a decent streak, or because yesterday we showed signs of life and then today we're not recognizing that, hey, wait a second, it's not the same. So one of the key things that we need to do as traders is always respect our risks. Always respect our line in the sand, our stops. And that's what we're going to go over today. So I'm going to show you a couple of things I did yesterday when I traded stock IBEIO and CETX to book a very small but manageable red day. Okay, and I'm going to show you what I did and how I protected myself as the day progressed on an extremely slow day. All right, guys, so as we jump into this here and I reset this video, do me one quick favor. You know what it is. Smash that like button for me and subscribe to the channel if you haven't. But yeah, definitely make sure to subscribe to the channel and smash that like button. Also remember to comment in the comment section below. Let me know what you think about this lesson and how do you mitigate your risk as well. So yesterday, IBEIO had made a real big move in pre-market and then sold off as the market got closer to open. That wasn't a good sign. However, we started to, let me see if I can pause this. We started to make this wedge pattern here, holding $1 as support and making higher lows. Okay, so I figured, you know what, this is worth a stab. The risk is very, very low. Why not jump in here and see if we can break over 140, go to 150, and so on and so forth, maybe up to $2, right? So I jumped in just 1,000 shares at $1.29, right in here in this, at the tail end really of this wedge, looking to see whether we're gonna pop on over or break on down. If we break on down, no biggie, lose about 9 cents a share. But if we pop on over, we can easily make 20 cents a share at the first take profit and 30 or 40 cents on the following take profit. So the risk reward was there and it was sound. Now, when you're in a trade like this, and especially on such a cheap stock, people often say to themselves when it starts to break down, $1 should hold, $1.10 should hold. I'll hold on to it and see if it bounces back. But you can't do that because you never know what's really going to happen. I'm going to show you where IBEIO is today after we get through this. Now let's go ahead and fast forward this action. We're seeing a lot of resistance there at $1.30. Okay, there we pull back into the 90 MA. My stop is this $1.20 area. And there we go. I get stopped out. I respect my stop. Oh, but what if it goes all the way down to $1.10 and bounces? Well, then if it resets itself, I can always jump back into it. I can always buy another stock. What if it doesn't? What if it doesn't, hold 110? What if it fades down to $1? What do you say then? Oh, it should hold $1. $1 is real good support area because it's usually previous extremely harsh resistance. So it should hold now. Okay, what if it doesn't hold $1? What if it continues to fade? What if it does this? That's right. That's what IBEIO did today. Yesterday, it closed down here in the 80 cent, 90 cent area. And then today, it's dumping all the way down here to 76 cents. Let me show you the daily. Look at that. This is why you don't hold bags and why we, take profit where we take profit and why we put our stops where we put our stops. Our stops are there for a reason. Our stops keep us in the game. Our stops keep us alive until the next winning trade. If the stop gets triggered, the stop gets triggered, and we have to be disciplined in that we get out of the trade. I use hard stops. As soon as I enter my trade, I put out a hard stop. I always do. Why? Because, well, I use E-Trade. I don't have hotkeys on here. They have hotkeys, but they suck. So I put out a hard stop. And as my trade progresses, I move my hard stop up to the point where it just becomes a mental stop. Why? Because I'm putting out my profit targets to sell on the ask. So I'll just use a mental stop, right? But as soon as I'm in the trade, while that trade is working itself out, while it's consolidating, moving up and down, I have a hard stop set. That'll help me get out of the trade without any emotions. And it'll also allow me to, take a look at a few other things while I'm in the trade. Maybe I'm looking at a couple other tickers. That's what I did yesterday on IBIO. Now let me look up and show you CETX. So this is CETX. Now at this point yesterday I was already down about $105, something like that, with commissions, whatever. So no big deal, right? Because my winning days are generally $200 to $300, right? Sometimes even a little bit over $300. So my winning days are way bigger than my losing days. And I generally don't even have $100 and something losing days, generally speaking. Generally, my losing days are generally under $100. But yesterday I was down about 105. So I said, you know what? I'm not going to trade anything else right now because I had missed my opportunity on CETX. I'm going to wait and see if CETX sits up for the afternoon. If it gives me a setup in the afternoon that I can get long in front of with a very small risk, with a good upside potential, then I'll grab it. However, I'm not going to go out there. I'm already red on the day. The day is showing me that there's very low volume. Yesterday was a very low volume day. I'll show you the SPY now. And we're seeing resistance lines hold up. So I'm not going to go back into a second trade at full size or even half size. If I take a second trade, I need to protect this day. I need to make sure this day doesn't get any worse. Okay? I don't want to go from a $100 day to a $300 losing day. I don't want to go from a $100 red day to a $300 red day. At worst case scenario, I'm looking to have a $150 red day. That's still under my max loss for the day, but I know the type of day and environment I'm trading in, so I'm going to protect myself. So what do? I take very small size, 300 shares of CETX. Buy right in here on this dip down to this $3 area. Why did I buy that? Well, because at that time, that $3 area previously was extreme resistance. So I'm thinking that it should hold as support. Let me bring a 15-minute chart over so I can show you. As you can see, this is a 15-minute chart, so each candle's 15 minutes. Resistance here for 15 minutes at $3. Resistance here for 15 minutes at $3. Just under $3 here and here. Resistance here, we break over it, but we pull back into it, and then we finally break over $3 on real nice volume. So I think to myself, okay, well, maybe we'll get a squeeze going here, from $3 to $4. So I jump in on that pullback with a tight stop and small size. And I say to myself, I'm not looking to lose too much money on this. I get stopped out. Just as fast as I entered, I got stopped out. But I got stopped out because I had a hard stop out and no emotions on the trade. And I held to the plan. Look at that. That's a nasty, nasty candle. Nasty candle. What happened? What happened after that? Did it recover? Nope. It continued a nasty sell-off. A real nasty sell-off. So yesterday was a red day, but it could have been much, much worse. The reason it wasn't much worse is because I respect my stops. I set my risk and I respect it. I don't, hold bags, lillygag over it, cry over it. If it hits my risk, I'm out. And I look at the environment, the overall picture. I said I was going to show you the SPY. So you can see yesterday's volume on the SPY. So you can see how little volume there was yesterday. I'm going to zoom in here for you. This is yesterday right here. Look at that volume bar. Look at these volume bars. Look at that little volume bar. There was no volume yesterday. There was just no volume yesterday. So I know what my environment is. I'm not going to, put on extra risk. Now, something that I have to work on is that when I'm hot, when I'm making money and the volume is there, the market is good, I need to push. I need to be willing to push and give up some of my profit. You know, I have to risk some of my profit on that day to push and go from a $200 day to a $400 day, from a $300 day to a $500 day, right? If I'm up $300, there's no shame in risking $100 of that if I can add another $200 to the day. So that's what I have to do. I'm very good about not over trading on days like yesterday and recognizing the environment and pulling the reins back. But I'm not doing well at pushing myself when the environment is favorable for pushing myself. So that's something I'm going to work on. What are you working on as a trader right now? What is it that you have noticed in your trading that you need help in? Drop it in the comment section below and let's chat about it. Hope you enjoyed this video. Remember to smash that like button if you did. And if you haven't subscribed to the channel, please do so right now. And I'll catch you on the next one.